The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 14th. Terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. And today, you and I, we're going to go look at the circumstance of these markets, what the buyers and the sellers, what the bulls and the bears are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now's not too early. 877-927-6648. Of course, internationally, 727-445-1044. Would love to hear from you. So let's go ahead and get the show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow. She's trading up 125 points at 18,496. S&P is up 10 at 2162. We've got the NASDAQ composite up 26 points at 5032. Russell 2000 up 4 points. But let's start off the show by going to one of our great listeners who shares a lot with us, and that's Garo in California. Garo, thanks for calling. Thanks for holding. How are you doing this morning?
Thank you, sir. I'm very good. How about you, sir?
I'm doing very, very well. Good to hear your voice. And you wanted to take a look at Chipotle, I believe. CMG is the ticker symbol. And why don't you tell us what it is that you're doing, how it is that I can assist you?
I need your opinion regarding it's 4 days as it's going up, where it hit the upper dot in what was that, about 4 days ago. Now it's right at the 50-day moving average. Simple moving average is 2 days that it cannot cross that line. I want to see your opinion. That is that the time to short it, or you think this is going to break that 50-day? Because in May it couldn't do that twice. So you think that's the end of it? It has more power to break that 50 line, or this is time to short it again?
Okay, so folks, what we're going to take a look at here, we've got Chipotle up on the screen, CMG, and just so you can follow along with what Garo was taking a look at, he uses a couple of different tools, and as you heard, he uses some simple moving averages. He takes a look at a 5-day or period simple moving average, a 21, a 50, which is the one that he's focused on right now, and a 200. But he's also using that parabolic SAR. That was a great tool, momentum tool created by J. Wells Wilder. Now, when we take a look at these little dots, those are the parabolic SAR dots out here. And once price gets up to, in this case here, Garo was talking about the upper dots, they began forming out here on the trading session of July 7th. And as soon as price went ahead and hit that level, that was the signal to go ahead and take a long position. Now, Garo takes a look at some intraday charts, 30-minute charts, 15-minute charts in order to make those decisions. But right now, as he's pointing out, the blue line that is on my chart here is the 50-day simple moving average, and we can see how that has acted as resistance. So to help us analyze this and give Garo another piece of information, I think the best thing for us to do is let's go ahead and put up those horizontal levels of support and resistance. Let's take a look at our market profiles, and we're going to do that by using the daily. That's what I'm going to populate on my screen first here for you, Garo. And those are also blue lines. Those are horizontal. So let me turn off the moving averages for the moment, just so that it doesn't confuse anyone out here. And so the nice positive about Chipotle right now is it has cleared the resistance level of its daily market profile. So let's go ahead and turn, and that says that there should be support on any pullback at the 409.69 level. So if you were to short it, take some intraday trades, for example, you'd really want to be watching what happens at that price level of 409.69. But before we do that and just complete it, let's go ahead and put our weekly profiles. Those are going to show up as green horizontal lines. And this also is bullish. In fact, I'm going to go ahead and turn off the blue ones right now because we've got a little convergence of where two meet. And I want to be able to allow you to see clearly what this is doing on a weekly basis. So on a weekly time frame, it's cleared a significant level of resistance. Now, the week's not over. So it's really going to be about tomorrow. But so here's how I would take a look at it. If price is unable to clear the 50-day, the 50-day simple moving average, and it were to close back below 417.66, this would give you that message at least that you could play this trade, in between that price and maybe the top of that daily profile out here. But if price is able to close above 417.66, the message here would be that it has cleared a very strong level of resistance. And the reason is that the point of control, the smaller little dotted where my crosshair is closer to the top of that box. And that says that sellers should be lined up, just like you're identifying at the 50-period simple moving average. So sellers should really be lined up here. But if price is able to close above 417.66, that would be an additional positive inside of Chipotle. So then where does price perhaps head to? If it's going to move above the 50-day line, I would just simply come back to just normal retracements and say the next target to the upside would be 435.59, and that was taking a look at the daily chart, Garo. I'll throw up the 30-minute chart out here. Is there anything that I've overlooked or pieces of information that I've given to you that don't make sense or don't line up with what you're looking at? In the 30-minute chart here, we can see that even it is now suggesting that price wants to move higher. So that's at least that's my take on it. But give me your take as well, please.
I don't have that 435.59. I don't have.
That was the 435, Garl, was just simply the 0.618 retracement, the 0.618 retracement of the move from the high of May 23rd down to the low on June 14th. Because price has cleared all kinds of other resistance levels, I'm just giving you the next logical price target on a move higher, if it can clear your 50-day simple moving average.
Yes. So the 417.66 from there on is a short, or if it breaks from here is 435.59.
If it closes, let's say tomorrow, closes under 417.66, you're going to have two levels of resistance that have held out here. And then that says, okay, it's in some kind of range. What's the downside potential? What I would use is I would say that downside potential, it probably doesn't clear below the 409-ish area, whether it's 409.44 to 409.69. If it gets below both of those, then you're absolutely right. Then this thing could even run all the way back down to the bottom. So that's how I would look at it with the additional tools that we've added here. All right, my friend?
Yes, sir. I appreciate it. Thank you.
My pleasure. That was Garo in California, and that was using all sorts of tools to take a look at Chipotle, ticker symbol CMG. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back. Dow's up 103, S&P is up 7. Have a request from our Tigers Den to take a look at ticker symbol CTAS, Cintas Corporation. Cintas being very, very good. Let's take a look at a monthly chart out here. One thing you'll notice here on the monthly chart down here at the lows back in March of 2009, nice little key reversal candle, bullish engulfing, which had engulfed the prior, quite frankly, 5 months, 1, 2, 3, 4, the prior 1, 2, 3, yeah, the prior 4 months out there. So really nice reversal candle inside of Cintas. Now what we can see here, this is the middle of the month, right? It's July 14th, and right now it's gotten tired. At least by mid-month. Why do I say that? Because we've got a little doji candle that has formed. The open this month is 97.82, and it's trading at 97.84. So 2 pennies yet inside of Cintas. I don't know how the month is going to end here, but if it were to end as a doji, it tells you that price is stalling. And yeah, geez, after a run like this thing has had, which has gone from a low during that March time period of $18 to where it's at 97 right now. So that's a 500% or so type of a move to the upside. That's without, and mind you, without any real significant correction of any kind of significance out here. I mean, everybody or nearly everybody inside this equity is in the party. Now, one potential problem inside of Cintas, let's do this. Let me throw this other chart over on my screen for us. And what this chart, this tool allows me to do, just as Cintas, CTS was forming its bottom, by the way, with that key reversal. Let me get my cursor out here. You can see that price had been moving lower, doing it with less relative energy, and the cavalry didn't arrive until that March 2009 timeframe. That was your signal from this pattern to actually go ahead and go along the equity. Well, now what we can see here is that price is continuing to move higher with less relative energy. Now, there's no cavalry. There's no bearish cavalry that has arrived. The very first time that there was the potential was back here in, was back here in July of 2014. But in August of 2014, that bearish reversal signal, which was just a small bodied candle, so it wasn't really a huge signal, but it was a signal, failed failed, continued moving higher. The bears got trampled. If anybody tried to short this thing, there were no signals, other signals that would say try to short this equity. But now we're at a stage here where prices continue to move higher, doing it with less relative energy. What does that mean? That just means caution, Will Robinson. Doesn't mean to short it. It's not exactly what you'd like to see mid-month out here. If it ends with a doji, then a lower price in the month of August out here could set a top in place. Could be a significant top inside of the clothing. That's what these guys do right there in the clothing uniform rental business out here. At least says that a reasonable pullback could take place inside of Cintas. Now, let's take a look. Well, let me just put this on a daily chart. Oh, what's the other thing that I should point out? Let's just do our wave counting inside of this equity. So from the low in March of 2009, you can see it's moved well beyond a seventh wave. The way that I do my wave counting is, in this case here, since we didn't see any significant retracements inside this equity, I'm just going to come back to the low that formed after that fourth wave. And now what that does, interestingly enough, gets us up to wave number 7 as well. So you've got two topping-ish type patterns, no signals, just topping-ish type patterns, like a weather forecaster, that's going to call for partly cloudy skies. Those partly cloudy skies are here right now. And the question is, the sun can burn this off by continuing to move higher, but that's what it's going to have to price. That's what it's going to have to do in order to not have to worry too much. So if I just switch this to the daily time frame out here, let's see what the daily time frame is showing us. Not a ton out here, but trading below 98.37 isn't exactly what you want to see. Clearing that to the upside would be nice. Let's just take a look and see if there's anything else out here volume-wise on a daily basis. So let's switch this back over, and as we take a look at it, if this pulls, now this is always a hard one to figure out here. I think it was Mitch that was in this, and that's where on May 31st, you had buku volume for this equity. It was 3.6 million shares, but there was no price movement. So I don't even know what the heck that was all about. You like to see wide price spread and accelerated volume. You didn't get that here. You had accelerated volume inside of this equity. If we turn on our daily profiles just simply as one last tool out here, daily and weekly, on a retracement here, look for the level of 95.57, 95.42 to hold that support. And if it doesn't on a pullback, then you head back down to the swing point from June 27th. So I hope that helps you out with Cintas, CTAS, a really nice looking stock, but it does signal that the end may be near. Okay, so we got the Dow up. That takes care of all the requests that I know of, but go ahead and send me more, either by email, steve@tfnn.com, obviously posting inside the Tiger's Den, and call. Of course, calling is, that's a beautiful thing out there. Now, so what should we do here with the markets? I think the best thing to do at 1:24 in the afternoon is to get our frame of mind and talk about different time frames out here. And let's go see what it is that we know about the markets. Let's not get caught up into the beliefs about the markets or whether it should be, how we've gotten here, whether it's right or wrong, or because this is about technical pattern recognition. And so let's go look at the technical patterns that provide us with an edge. That's called the trader's edge. That's why we're doing this right here, right? So with regard to the trader's edge, let's start off by just stepping back for a moment and seeing where is it that we are at. And we're going to do that by taking a look at, well, let's do a couple of things. Let's take a look at this chart right here, right now. And that's the S&P 500 and the Dow, both of which have cleared significant levels of resistance. Now I'm showing the weekly charts. This is the weekly time frames out here. The weekly time frames, those yellow line, are your resistance points. And as long as price is able to close above those, 2134.72 in the S&P, 18,351.36 in the Dow, you may have a change in polarity, as it's referred to. So you've got a change in trend, the consolidation that's been going on for what seems like forever may be broken out here, and that offers a lot of upside potential. Likewise, I get off the show, or maybe the market waits till our favorite polar bear, David White, gets on, and it just simply takes off to the downside. You get closes below these levels, just like Garo and I were talking about. In his case, he was using a 50-period simple moving average. You close below these levels here, we will not have had a breakout at all. We will just have had a spike to the upside. And that then sets up a market that says, the consolidation could still be in place out here. But right now, what we know is the highs have been penetrated and broken, and prices trading above it. If we take a look at the actual index consolidation, so here's a monthly chart for these indices out here. We've got the Dow in the upper left-hand side. It says closing above this resistance level brings 21,200 into play. That is the size of the consolidation. In the S&P 500, it's 2450. Closing above these levels and how things are, where price closes tomorrow is going to be very important. And staying above these levels is going to be very important, because if they do, folks, the market has broken out and wants to go to higher highs. The Russell 2000's broken resistance. We're just waiting on the NDX 100, the NASDAQ, to at least get up to the top of its consolidation, somewhere around 4,700. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Halfway through the show. Now, we were starting to take a look at the longer-term picture. We're going from longer-term picture and then kind of moving back. And it's important because we've got these key levels of resistance that have been taken out. You've got to be focused on that and recognize what that means until they fail. And we don't know if they will or they won't fail. But at this stage, you have to go with the information that we have. Now, it's the NDX 100 here that has not broken through its highs. That is likely where it is going to move to, is to the top of its range out here, which is somewhere in the 47-ish 100 type area. That's the lower left bottom panel of my screen out here. So we've got that is going on. If we take a look at... and we're going to stay with the long-term view out here, we're going to go to this. We're going to go to this chart. So where is it that now heading to 21,200? That doesn't mean next week or the week after or the week after that. And 2450, doesn't mean it could be December. For all I know, it could be a part of the Santa Claus rally. For all I know, I just know that that's the price target level if price can stay above these consolidation highs out here. In the shorter term, still take a look at long term. Whoa! I hate that when a dust particle just flies right into your larynx there. Not fun. Okay. Now the charts that we have up on our screen, this is going to give us this is how we'll bridge the moving from long-term to shorter-term charts out here. But here's the Dow. Left-hand panel of my screen is the monthly chart. Center panel is the weekly. Right-hand panel is the daily. These have our horizontal trading range boundary lines. These give us targets. These help us. These are lines of support and resistance. That's once broken through, you will gravitate up or down to the next level. In this case here, it's all gravitation to the upside. So on the shorter term basis, that would be the daily chart. What this says to us, I'll go ahead and expand this out. What this says to us is that clearing 18,317.57, and we're not going to use it right to the penny out here, but you can see how that line has acted as resistance. And these horizontal trading range lines out here, these were determined many years ago. And so what we're taking a look at, you're looking at the solid lines out here. Once you clear a solid line, that's your primary range out here, says you're going to go up to the next level. Now, there's a midpoint, and we pay attention to those midpoints. And this is likely where the Dow is headed to next, which is 18,614. Again, staying above 18,317 out here, okay, a little bit different than the figures we were looking at, would be also very bullish. That's taking a look at the daily. So 18,614 is its next target area. As long as it stays above 18,317, its daily message is 18,911 becomes its target. If we switch over and take a look at the weekly is above its profiles out here. It's trading with inside a fairly significant horizontal trading range boundary line. This says it wants to get to 18,673. These numbers don't necessarily line. They're not supposed to line up with each other out here because we're using different data points. We're using the open or the close of the body of a session. In this case here, we're looking at the weekly chart. So we've got 18,614 on the daily midpoint, 18,673 on the weekly. It looks like that is a good number. And drum roll, Johnny, please. The monthly out here has got 18,790. All basically within about 100, 150 points or so of each other. So it looks like that price target of 18,790 is where things are headed to before we start to see perhaps some kind of a pullback or retracement. But over the longer haul, as long as prices stay above the consolidation levels, those longer-term price objectives become the market. Now, we're going to go from the daily and start kind of working our way back and see what kind of daily messages we have out here. And on the daily message, let's take a look at the Russell 2000 first. Let's take a look at the IWM as well as what the Russell 2000 versus 1000 is doing as we speak right now. The top portion of my chart is that ratio. Now, the market performs best the overall market when the Russell 2000 is out in front. Now, how do you know if it's out in front or not? Well, one way people might look at it is, hey, where is it in relation to prior swing points? And that's okay. But what's a better way of just understanding if it's out in front is what are the small caps doing versus the mid caps, the large caps out here inside of the Russell. And in this case here, those are the blue lines that are on my chart. We can see a nice little rising price channel that this is trading in. We've seen that it's actually turned down slightly today, and when we see a turn down of this ratio, we've typically begun to see a bit of a pullback out here. Now, as long as on any pullback inside the Russell 2000 occurs, now this is the ratio that we're taking a look at, that's the upper screen, the bottom panel is the IWM, but any pullback, what you and I should know is that pullback should then start to move higher again, or the next bottom should occur at or near the top of that rising price channel. And this is just a ratio, but folks, you take a look at these price channels, they work really good as support or resistance areas. If you are one that is trading the small caps, the TNA, the TZA, vehicles like that, you want to make sure that you utilize this tool to understand where price is headed to and where you're likely to find some support and or some resistance zones out here. Now, the bottom portion of the chart happens to be the IWM. Interestingly enough, the June 27th Brexit low that occurred inside the IWM was right at the bottom, right, of the larger descending trend channel that price is now broken above. So the Russell 2000, which has been, we can look at some charts and see it trading sideways. We can see the trend to the downside. That's over with. It's over with. You've had the test. So the IWM now, and we're just looking at a daily chart, is giving you and I a wonderful signal that it too wants to move to higher prices over time. Right now today, it is the small caps that are underperforming, and maybe that's a little cautionary signal of some type of market pullback. So let's take a look at that daily chart. If we look at the New York Stock Exchange out here, and you know, you've heard us talk about this before, nothing more bullish than a failed bearish pattern. This includes the NDX too, by the way. Maybe we'll get to that. But the New York Stock Exchange clearing every island top pattern that it had formed here over the past couple of months, and the only thing that's left is the island bottom pattern out here, Mon. So you got to like that. It is bullish. However, okay, it's starting to give us some of those diverging patterns that say it's not unreasonable to think we're going to get a little bit of a breather, a little bit of a pullback. Doesn't tell us when, but when you start to, now here's the deal. We saw the advanced decline oscillator. That's the center portion of my screen out here, the one where you got yellow lines going across it at positive 150 and negative 150. You get above positive 150, it's just telling you there is plenty of liquidity. And that's what this is all about. I saw some article being posted about conspiracy theories. Folks, there is liquidity. There is plenty of liquidity. Now, Russell 2000 outperforms the 1000. Its message is simple: liquidity. When the VIX is below the 50-day exponential moving average, it has one message: liquidity out here. Doesn't mean things aren't going to, we can get that to the intraday timing type stuff out here. But daily wise, man, oh man. Now, you got the divergence, new highs, 52 new week highs. We got a little bit of a declining tops. You got the advanced decline oscillator now, starting to have a little bit of a declining tops pattern out here. So yeah, there's a retracement in our near future. Just doesn't tell us when. But long term, strong like bull. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 107, S&P's up 8 points right now. So, we've seen a couple of signals out here that just say a bit of caution, with regard to pullback. Not like, these moves higher are over or anything along those lines out here. So, and I just want us to just make sure we just stay inside the trade, the signals that are out there. So hopefully this is assisting you. Now, what should we go take a look at next? Let's go take a look at, now we've gone from long-term monthly views, we've taken a look at a little bit of the weekly, daily. Now let's go start getting into the weeds out here, deep in the weeds. And let's start off by looking at, let's look at the ES Mini. Let's just start here since that's more of a traded vehicle out here. Now, with regard to any patterns up at the highs out here, that have occurred, early. Right now, we had a high that, as of 6 o'clock this morning, was up at about the, I don't remember the exact number off the top of my head. What is it? Come on, don't do that to me. We're on the radio. TV, that's 2168. Price was moving higher, was doing it with plenty of energy out here. And however, it did begin to sell off. No price relative strength divergent pattern, nothing along those lines, no seventh wave moves, no anything on a 30-minute chart. What we now are seeing is a test of its TAS market profile, and that's the black level of support, which is at 2153. If that level holds, then the move to the downside is likely over out here. Now, over could also mean that you just get a bounce up to about the 2159 area. But closing below 2153 says, okay, time for us to go take a look at the next time frame chart out here to see what's going on. And for us, that would be the 2-hour chart. So we're just simply taking a look at, hey, what's the market doing? What's the heartbeat on shorter term time frames? And the ES Mini, we know it's right up against, straight into support. That support level fails, we'll go take a look at the 2-hour chart and see where its support is. Its support happens to be at right about the same place, if not exactly the same place, as the 30-minute chart out here. So this would say, hey, strong level of support. And that's at the 2153 area. So 2153 and a quarter to be exact, one tick out there. So if, in fact, we see a close below that, then both the daily and the 2-hour chart would be saying, oh, we got to go take a look at the 5-hour chart to get a feel for where price might pull back to next. Any type of significant reversal pattern on the 2-hour chart? The answer is no, not with regard to the ES mini out here. Let's go take a look at that 5-hour chart. What does it tell us out here? Well, here on the 5-hour chart, and this next candle closes in 15 minutes at 2 p.m. We've got a pattern that says there's an A to B equals CD to the upside that is underway. Its price projection is 21.89. On the way to the upside, on the way up at 6 o'clock this morning, was it 6 or was it 9? I think it was 9. Yeah, 9 o'clock this morning, price had been moving higher, doing it with less relative energy. Now, you can see a couple other instances of that occurring. I mark those on my chart automatically, of course, so that I don't actually have to do, I had to do all the work to come up with the trading strategy. But now I let the chart patterns do it for me. And even though you saw those in the past, no cavalry. Without the cavalry, if you don't know your Japanese candlesticks, if you don't know which bullish or bearish reversal signals, spend time and learn it. Really learn it, because that is how the market speaks to you and I. That's the language. This is the language of the markets, and works on all time frames. Well, now we've got what looks like we're going to have a bearish reversal signal at a price relative strength divergent pattern. In wave number 6, we'd prefer to see 7, but the market's going to give you, it can't always give you all the signals at one time. And then what does that say? That says if we break through the 21.53 level, then that says price is going to come back to 21.49. Now, that's not a big push to the downside. That's no big deal out here. But below 21.49, that's going to bring into play 21.37, maybe even 21.27. That's take a look at the ES mini. So that's what's going on when we take a look at intraday type charts, but it doesn't impact the longer term views that we have right now. Of course, we'll know more tomorrow when we see the market close. So that's an overall view of what is going on inside the market. I had a question that came in, asked if I would take a look both at gold and at light sweet crude. So let's go do that. Let's take a look at light sweet crude. Let's do use a couple of different charts out here. What do we know today in light sweet crude? Well, what we know here is, let me get my other panel so I can turn some things on and off. Let's turn off the retracements out here. We know that price broke through a trend line, simple trend line coming off the lows back here in January. Broke through it to the downside, got back above it on the trading day of July 12th. It wanted to get back inside that trend, and then that went, oink to the downside. And it is now continuing to trade below that trend line. So that says, potential problems here. Change in trend underway. It still has not taken out, and it's an important level to take out to the downside, so it's really in this narrow range out here. It's got strong support at 44.42. We know that because of the cavalry that arrived out here. They are protecting that line out here, and that price again is 44.42. But if that fails, which means not a spike below it, it means a close below it, then price is going to run to the next level to the downside. You say, what is that next level? I say the 0.618 retracement level. That would be 39.88. That would become my target out here. So we want to just simply watch that low from a few days ago. And that's what's going on inside of light sweet crude. If we go take a look at Goldilocks, I don't really think my outlook here has changed. And that is, let's take a look at our TAS profiles. Let's go see where price is going to try to find support. A logical spot right now today was a test of the daily point of control. That's at 1322. Price actually got down to 1320.40 out here. The real key level to be watching on the daily chart is going to be 1315.10. You get below that, the next level becomes 1286. If you get below that, the next level, it's not printed out here, but it's going to be that wide-ranging bar from June 24th, which is going to be 1252. And below that, you're looking at 1193. The reality is, and of course I gave you this prognostication yesterday, is all of these levels are eventually going to fail. And gold is going to head down for not days, not weeks. Of course, it depends when it actually starts, but months. Stevie's saying October. Sometime in October is when we actually see that next bottom inside of gold. Now, I don't know just how far it's going to fall, but time Time is an important issue. So now, do we have that message here just yet? We've got the beginning of that message that it's ready to move to the downside. We're just not getting any participation from its cousin, which is Hi-Ho Silver. The Lone Ranger and Tonto out here are saying, not just yet. I'm not ready just yet out here. And in order for Silver to give us that message, it's going to be $20 and a penny, give or take a penny. But if we see closes below that, we start to see those daily profiles fail to act as support, then the move to the downside will be over. And the trend, you remember, we take a look at gold and silver. I don't think you and I have actually done this, have we? But let's do it. I'm going to switch to the continuous contract, GC. $F equals 1 on my system out here, and change to the weekly time frame. And there's one thing that we know about gold out here. Take a look at this. You think this trend line is important or not? Look at where gold, why did it not do that? Stay with me. Oh, it's because it's right inside that box. Let's see if it stays. And it doesn't. I'll have to do this when we get back from this break. Steve Rhodes with TFNN. We'll be right back, folks.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Before we went to break, we were looking at the longer-term chart inside of gold. We've put up the continuous contract, and what you will see here, the red line, which is dealing with the high from back in September of 2011. That was up at 1923.70, and I'm using that as my first touch point. The next touch point is going to be out here October, first week that began October 1st, 2012. That's out at 1798.10, and where price has stalled thus far is right at the top of that trend line out here. So you think the trend is your friend, or trend lines are important out here. And interestingly enough, this week, I don't know how tomorrow ends, but if it ends, 1 penny to the downside, you've got a key reversal session up at resistance. Key reversal, again, being where the prior days, or in this case here, prior weeks, both high and low have been exceeded. We've got that. You come at an extended condition. Well, we've got that. And you just have to close one tick in the opposite direction. And as we speak right now, you've got that. Last time we saw a key reversal week inside of gold, well, that was down at the bottom. That was down the week that began November 30th, 2015. That's when the low was put in. So, is it important to be paying attention to sessions like this, key reversal sessions? Well, my goodness, yes. This is how the market communicates to you and I. The previous key reversal top that had been put in inside of gold on a weekly basis, well, that was around March 17th, the week that began March 17th in 2014. That was a key reversal week there. So that's what's going on in Goldilocks. Have a request to take a look at GDX for Bob. Bob wants to know where is support inside of the GDX. So let's put this on a daily basis. Let's go ahead and give Bob our market profiles as one level. Let's turn those actually on. That way he can see what we're taking a look at. In this case here, this says that support inside of the GDX ought to be, the first level ought to be $28.13. That happens to be the top of a weekly market profile. I will say that closing below $30 and it looks like $30.05. About 30. What's the low today? I'll just use the low of today. Low of today, $29.35. No, that's not it. About, where is the open? The open, $29.52. That's probably not it either. Well, let me see here. I'm just looking at, yeah, I'll use that, $29.52. So if you close below $29.52, you're not there yet. You're at $30.16. That would suggest to me that you're going to see the GDX go ahead and go test that $28.13 level. The ultimate support out here that you're going to watch for is the weekly profile. The weekly profile being $26.17 inside of the GDX. That would also get you all the way back to the swing point for May 2nd out here. So that's inside of the GDX. I don't see anything of significance out here topping wise, but it'll take its cue from both gold and silver once they get together and decide to team up and crush the bulls that are out there. And we know that's happening. I know that's happening because I'm seeing memos from wealth management companies, the biggies out there, that are suggesting changes to wealth client portfolios, and they're now suggesting, you don't think they're late in the game on this, do you? They're now suggesting adding gold miners to the portfolio. Where were they back in January of 2016 out here? When the portfolio was down at about $13 versus 30. In any event, stay tuned, folks, because our man, the polar bear, David White, is up next. He'll have some great information for you. And, of course, it's Thursday. You know what that means. We've got a team of folks around here at TFNN. You've got the Tom O'Brien Show from 3 to 5, and Andy Heck. Andy Heck to take it on home from 5 to 6. Have a terrific Thursday, folks. And we'll see you on fabulous and fantastic Friday. Have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.